Hello guys, this is fairbinaryoptions.com and we are looking at this Friday the 4th of April at the US dollar Japanese yen with some bearish eyes, and therefore I would like to buy put options as I'm looking for market to move to the downside from this very moment of time. The reason for those put options are both technical and fundamentals, but here I will treat the technical part. For example, if you're taking the trend line from the lows here like this, let's make it of a different color and let's make it a bit bigger so it is more visible for us, like this. And then if you clone the trend line and go with that to the upside, so keeping the same angle, keeping the same construction, and you put it here, you're seeing that we are having a classical channel, and this channel, as you can see, it is as corrective as possible. What does it mean? It means that all these waves here within the channel are corrective in nature. They are not impulsive moves, and therefore it is just a corrective wave that should continue to the downside. Now, how can such a pattern be labeled, or what can we do whenever we identify such a channel? Well, first of all, we should take a Fibonacci retracement and then measure the length of the channel, and then look at the 50% retracement here. So let's take another Fibonacci retracement, because we want to divide the channel into two equal parts, basically to have a range. Now if you clone this line from here again and you drop it to the downside like this into the 50% retracement, and therefore, well, there you go, we have our channel divided into two equal parts. And of course, the logical thing to do, because this is bearish, so it's about, or is supposed to break to the downside. Every time price breaks into the upper side of the channel, we are looking to buy put options, and every time breaks into the into this area here, we still want to buy them put options. Now, it remains very much on, or it depends very much on the type of a trader you are, the aggressiveness, and of course the time frame identified. What I would do here, for example, is to split this into another two parts. So this would be something like this. Let's change the color for it. Let's make it like this. And what I would do here is every time price is coming into this area, I would like to buy put options. So basically this would be a nice place to buy the put options. Then price rejected here. See, all these areas here are acting as support and resistances. This is resistance finally broken, resistance where it comes here. See, this is a classical resistance. And now, of course, this is an area where I should buy, or where I'm looking to buy put options. What would be a logical thing to do that the price might do? Well, first of all, is for price to come here into this area. 103.60 is not that far. Second of all, is to come to the 50% retracement here, and of course, the last target would be this area, 101.60. And it depends very much on the aggressiveness that the market will have on its move or on its way to the downside. From my point of view, we are looking at a move to the upside here. This is no impulsive move, and still at, let's say, a corrective leg or corrective legs from the highs here and to here, only corrective waves. So either I will put this one like an A, B, C, X, A, B, and then a C wave to come to the downside. In both cases, in front of or in light of the non-farm payrolls to come in the United States. Remember, non-farm payrolls, the most important piece of economic data to be released every Friday, every first Friday in the month. Well, the first Friday in April is today, and it's going to be released at around, let's say, in the middle of the London session or at the beginning of the New York session. Well, this has the potential of being extremely volatile, and therefore markets will move fast. So long story short, in conclusion, what I would like to do here is to buy put options. So let's write here that buying put options with end of day expiration date as looking for a five-way structure to the downside, and of course looking for the channel to be broken or price to move into the lower part of the channel. Now, when you trade binary options, you don't have to be right for 100 pips or 200 pips or hundreds of pips, but it is enough for price to be lower than the striking price and the expiration date, and the option would make money, or the option would be profitable. Thank you very much for being here. This is our strategy for this Friday, buying put options with end of day expiration date for the US dollar and the Japanese yen. And all this analysis and recommendations are possible due to the help of our sponsor here, Lion Knife. Bye bye.